Hello all, good morning. So yesterday we have discussed about the tax rates applicable to companies. So if you look at the tax rates applicable to companies where the previous year 22-23 turnover is within 400 crores, then the tax rate is 25% under the normal regime. If it is more than 400 crores in previous year 22-23, then the tax rate is 30%. Surcharge rates up to 1 crore, nil, 1 crore to 10 crores, 7%, above 10 crores, 12%. Then optional optional tax rates for companies. 115 BA, if it is a domestic company which is into manufacturing, then the tax rate is 25%. Surcharge rates, the common thing, the same as like greater than 1 crore, 7%, greater than 10 crores, 12%. Then 115 BA, 115 BA is what? Any domestic company, the tax rate is 22%, whereas the surcharge rate is like 10%. Then 115 BAB, domestic company, tax rate is 15%, surcharge rate is again 10% fixed. Then foreign company, the tax rate is 35%. Then if you look at the cooperative societies, sir, normal regime up to 10,000, 10%, up to 20,000, 10,000 to 20,000, 20%, greater than 20,000, 30%. The tax rates are like, surcharge rates are like same as like company. Then optional tax rates applicable even to cooperative societies. Under 115 BAD, it should be a resident cooperative society other than 115 BAE. Then the tax rate is 22% and the surcharge rate is like 10% fixed. Then 115 BAE, cooperative societies which is into manufacturing, and the manufacturing has been it has been registered on or after 1st April 2023 and the business started before 31st March 2024. Then the tax rate is like 15%, surcharge rate 10%. For firm, LLP and local authorities, the tax rate is flat 30%. Surcharge rates above 1 crore, it is 12%. Okay. So now we'll discuss some basic points in the theory, sir. Then we'll discuss about the deductions which are available under 115 BSc and not available under 115 BSc. So many comments came in. Kalyan, I don't understand why you are talking about some other faculty, Ashok sir here. I didn't understand that. So we'll be discussing, sir, first few basic points only. We know these things already, but just to have a clear understanding of the terminology. The first one is like maximum amount not chargeable to tax. Maximum amount not chargeable to tax. Maximum amount not chargeable to tax. This is nothing but called as the basic exemption limit also. Maximum amount not chargeable to tax. This we can even call it as like basic exemption limit. Maximum amount not chargeable to tax. This is the basic exemption limit. See, we have two regimes here. There is a old regime as well as a new regime. So that's why we'll take three columns are here. The particulars column will be there as it is, and the default or the new regime, whereas here the old regime. So first, the basic exemption limit. Sir, basic exemption limit comes only when there are slab rates. So that means to whom it is individual, HUF, AOP, BOI, and then AJP. Individual, HUF, AOP, BOI, AJP. Then the tax rate, then the basic exemption limit under default regime is how much, sir? 3 lakhs. Because up to 3 lakhs, na? Whereas under old regime, it is 2,50,000. It is 2,50,000. Then in case of individual who is a resident and age greater than 60 or equal to 60 but less than 80. So these people we call as what? Senior citizens. For them, under the new regime, the basic exemption limit is 3 lakhs only. Okay, but whereas under the old regime, from 2,50,000 it increased to 3 lakhs. Then individual, again resident, age greater than 80. In this case, under the new regime, default regime the same, 3 lakhs only. Whereas under the old regime, it is how much, sir? 5 lakhs. It is 5 lakhs. Whereas for firm, company, local authority, are there any maximum amount not chargeable to tax basic exemption limits? Nil. It could be any regime. For them it is what? Nil. So then, sir, how do we calculate tax, sir? First, we'll calculate tax. Then, after tax, we'll do what? We'll plus or minus surcharge. Surcharge, or there could be even rebate as well. Surcharge or rebate. Surcharge or rebate. Then as I already said, the surcharge has to be levied on what? Tax. And the third step is like we should levy HEC, Health and Education Cess. It is how much, sir? How much is the HEC? 4%. On what it has to be levied? 4% on tax plus surcharge. If it is rebate, na, tax minus rebate, whichever is applicable. %4 on tax plus surcharge or 4% on tax minus rebate. Then the next concept is about rounding off. The total income and the tax payable has to be rounded off. So let me explain you about rounding off. Rounding off under the section 288A and 288B. So what does it says? Either it is total income or tax payable. Total income or tax payable should be rounded off to nearest multiples of nearest multiples of rupees 1 or rupees 10. 10. Sir, in GST, remember it is rupee 1. Round off to nearest multiples of rupee 1. But whereas under income tax, you should round off to nearest multiples of rupees 10. Total income or tax payable should be rounded off to nearest multiples of rupees 10. It means, let's say I have 6,75,433. So post rounding off, how much it would be? 430 only. Nearest multiples, na? Understand, sir? 5 and above 5, you should round off to next 10. Below 5, na, then you should be rounding up to the before 10. So here it would be how much? 6,75,430. Then for you to have clarity, 6,75,435. You should round off to 440 only. 6,75,440. If it is 6,75,437, again 440 only. So less than or equal, less than 5, then round it off to the previous 10. If it is 5 or more than 5, na, then round it off to the next multiple of 10. Rounding off. Then the next concept is about average rate of tax. Average rate of tax. There is one chapters are called DTAA, where in every sum we'll be calculating average rate of tax. Okay. So average rate of tax. Sir, average rate of tax is nothing but tax payable. Tax payable. So how do we arrive this tax payable? Means this tax payable is the total, sir. Total, na, it includes like tax plus surcharge plus cess all together divided by total income. So total income, na, if nothing is mentioned, just total income means what? Net total income into 100. If you do, you will get the average rate of tax. Tax payable divided by total income into 100. Example, sir. We need to do quickly, sir, this example. A person has income from house property. Let us take it as like 7 lakhs. He has interest income 25 lakhs. Okay, such person is an individual. Individual, age 45. Individual, age 45. Income from house property 7 lakhs he is having. Interest income 25 lakhs he is having. Then he has long-term capital gain under section 111A, sorry, 112A. 112A, another 15 lakhs. Assuming everything after 23rd July 2024 only. After 23rd July 2024 only. He has dividend income. He has dividend income another 10 lakhs. He has dividend income another 10 lakhs. Okay, so if this is his income, what is his total income, sir? We could straight away do here also. Total income. There are no deductions, so straight away, sir, gross total income, net total income will be same. How much here? 57 lakhs. Sir, 57 lakhs means if you want to check, you can check, but there will not be marginal relief. Okay, because it is not much closer to the surcharge limit. Surcharge limit, if it is closer, surcharge limit is 50 lakhs. If it is closer to 50 lakhs now, I mean somewhere like 52, 53, there is a chance of marginal relief. It is 57 now, there is no question of marginal relief, so forget about marginal relief. Okay, and I am taking it, sir, since currently default rates are only applicable, I am taking what? Default rates only as main. So default rates only, sir. But before that, on what we need to calculate tax, sir? Long-term capital gain is a special rate income. We need to calculate tax on it separately. Okay, sir, this 15 lakhs is after exemption only. After exemption, under long-term capital gains, there is 1,25,000 exemption. So I am taking it after exemption, then that is after 23rd July 2024. So straight away this 15 lakhs is what? Taxable at a rate of 12.5%. So if you exclude this 15 lakhs, what is the other income? Other income is how much? 42 lakhs. Now for this 42 lakhs, we should calculate tax under slab rates. First 15 lakhs, 1,40,000, the balance amount. 27 lakhs into 30%. Don't do surcharge now only, sir. Only tax, how much? 9,15,000. 9,50,000 is the tax on other income. Whereas on long-term capital gain under 112A, sir, how much is the tax rate? 15 lakhs into 12.5%. How much? 1,87,500. So take a total of it. 11,37,500. Okay, this is the tax. But here what is applicable? Surcharge is applicable. What is the surcharge rate, sir? Surcharge at a rate of 10%. Individual above 50 lakhs. Surcharge at a rate of 10 lakhs is applicable. So how much is the surcharge? 1,13,750. So now we need to add what? HEC. HEC at 4% on what? Tax plus surcharge. 50. Okay. Okay, so what is the total now? 13,01,300. 13,01,300 is the tax payable or the tax liability. It's tax liability. 13,01,300. Now we need to find out what? Average tax rate. Simple. This 13,01,300 divided by 57 lakhs into 100. You will find out what? Average tax rate. Average tax rate equals to 13,01,300 divided by 57 lakhs into 100. How much? 8%. 22.8%. This is the average tax rate. Average tax rate. So then the next one is like, sir, maximum marginal rate. maximum marginal rate. So this maximum marginal rate we'll see in case of AOP, we'll see in case of TDS provisions. Usually under TDS provisions, they'll tell tax rate. Like 10% has to be deducted, 1% has to be deducted, 2% has to be deducted. But if the deductee, I mean to the amount, to whom the amount has to be paid, okay, such deductee is not given his PAN details. If he has not given his PAN details, then TDS has to be deducted at MMR, maximum marginal tax rate in some cases. Okay, so there. And in case of AOP also, if all the persons didn't provide PAN details and all, then the AOP will also be assessed sometimes with what rate? Maximum marginal rate. Okay, so when they are non-complying certain provisions, then they will be using maximum marginal rate. So how do we compute maximum marginal rate? Now take highest slab rate applicable. Take highest slab rate plus highest surcharge rate plus S. Take highest slab rate, on that what you should levy? Highest surcharge rate applicable and the cess. Sir, then it would be changing in both the regimes. New regime it will be different, old regime it would be different. Okay, so if you take new or default regime, what is the highest tax rate, sir, under the default regime? 30%. On that, what is the highest surcharge rate slab? 25% is only there. So plus 25%. Plus on this what we should do? 4%. So this 25% on tax plus this 4% on tax plus surcharge. So how much it would be? 30 on 30 you should levy 25%. And then again on the total you should levy 4%. How much? 39%. 39%. Whereas under the old regime, so what is the highest tax slab rate applicable, sir? 30%. Plus what is the 37% plus, sir, this 30 you should not add straight away 30 plus 25 plus 4. Okay, 25% on tax. Here also 37% on tax plus 4% on cess. 4% on tax plus surcharge. So together how much? 42.744%. 42.744%. So this is about what? The average rate of tax and maximum marginal rate. Then there is something called revenue receipts versus capital receipts. Revenue receipts versus capital receipts. Sir, you have a building. I mean nothing but in tax language we call it as like what? House property. On house property regularly you will get what? Regularly you will get rent. On house property you will regularly get rent. But on sale, you will get what? Capital gains. On sale also you might get some profit, which we call it as what? Capital gains. So the revenue which comes regularly or the income which comes regularly, the receipts which come regular basis are called as what? Revenue receipts. Okay. On sale of house, it is like one time only. Then that is called as what? Capital receipts. Revenue receipts are always taxable. Capital receipts sometimes taxable, sometimes they are. Mostly they are exempted, but only sometimes they are taxable. Okay. For example, let's say if you have taken a loan, revenue receipt or capital receipt? Capital receipt only. If you have taken a loan, okay, you will not take loan every day, right? So if you have taken a loan, capital receipt, so that is not taxable. Okay. But revenue receipts are usually taxable. Revenue receipts now like interest income, salary, rental income, dividend, okay, which comes regularly. Then those are called as regular receipts. Capital receipts now for us mostly we know about capital gains. Capital gains now it is taxable only. Okay. But it's not like always. Certain capital receipts might get exempted, and that also understand, sir, the whole receipt amount is not taxable. In case of capital receipt, let's say you sell the house for 5 crores. Not 5 crores is taxable. The gain you made alone is taxable. The gain you made alone is taxable. Whereas, okay, even in case of revenue receipts also, if it is a business, only the profit part is only taxable. But in case of salaries, okay, if you are an employee, from salary you cannot again reduce expenses. Okay, for getting job, I have studied this much, all this costs and all I need to set off. And then like you went to go to office properly or decently, you went for shopping, you bought a car, all these things you cannot take. Okay, there is a case law in actually PGBP, sir, related to one lawyer actually, he had a heart surgery. Okay, and then on that heart surgery, he has taken the expense to P&L. Okay, so then the income tax obviously disallowed it. How can you take heart as plant and machinery? Okay, he's saying like heart is my plant and machinery because for my profession, me only the asset. For me, my heart is the plant and machinery. So I'll claim expenses which were incurred for it repairs or something. So I'll be taking it to the P&L. Income tax is disallowing. Since he is a lawyer, he went till Supreme Court. Okay, then Supreme Court said like, maybe it's plant and machinery only, but it was not solely used for the purpose of business. Because it has other operations also, like it pumps blood. Okay, it has other activities also. It's not solely into business, that's why not allowed. And they cannot even divide also how much is for business and how much is not for business. So here, sir, this is what revenue receipts. Revenue receipts. So what are called revenue receipts, sir? Write down income and by way of utilizing the source of income. Income and by way of utilizing source of income. House property is a source of income, sir. By utilizing it, rent has been earned. Income and by way of utilizing source of income. Whereas capital gains or capital receipts, these are capital receipts. Income and by way of sale of source of income. Income and by way of sale of source of income. Capital receipts are mostly exempted. Capital receipts are mostly exempted. Whereas revenue receipts are always taxable. Revenue receipts always taxable. Then we'll talk about the basic general rule of taxability and then the exceptions to it. The general rule is simple, sir. Previous year income is assessable to tax in which year? Assessment year. Okay. The general rule is like previous year income assessable to tax in assessment year. Previous year income assessable to tax in assessment year. Previous year income accessible to tax in assessment year. But for this there are certain exceptions. There are exceptions. The first one is like non-resident shipping business. The first one is like non-resident shipping business. Section 172. Non-resident shipping business. Sir, with respect to this shipping company, sir, whatever is the freight they earn for the passengers who are boarded from Indian port, okay, who are boarded, passengers, goods, livestock, whatever is boarded from Indian port, that freight is considered as income from income of India only. Understand, like Australia to India, a ship is moving. But when it comes to Indian port, certain passengers will will be boarding into that particular vessel. Goods will be loaded, livestock will be loaded. The freight earned from Indian ports is called as what? Indian income. That is taxable in India. But the problem is like this ship, once it goes away from India, we don't know when again it will come back. If they leave that, then there might not be a chance to tax that once. There might not be a chance to tax it again. Okay, they may tell that old avu pilgadu untadandi. Okay, cow and tiger story. So okay, a cow will go to forest, sir. Then there will be a tiger there which is waiting to hunt it. Then this cow will go and tell the tiger like, so there at house my child is waiting. I'll go there. I'll give milk to it, and then I'll come back for you. So you can then take me as lunch or dinner, whatever you want. Okay. It will tell the story to the tiger. Then tiger emotionally gets, okay, it cries, and then it understands the pain of that mother, and then it leaves. Okay, but that story does not work here. If the same shipping company also will come here and says like, okay, I'll go now. Afterwards in the assessment year, I'll come back. I'll pay taxes definitely and all. If income tax people listen to that story, na. There is one particular movie where Venu Madhav will tell that story. Okay, cancer and jeppesa, bata. Okay, so like that it will happen. Okay, so that's why income tax don't want to take that chance and all. That's why since you came now, na, pay tax and go. We'll assess your income also now. But the problem is, can they do the P&L now? Sir, shipping business, na, they are into business. When they do P&L, balance sheet, all those things, after the year end only. So how do we calculate their profit? They cannot calculate their profit. That's why they said like, okay, find out your Indian freights total from Indian ports, whatever the freight you earn, take it. From there, 7.5% multiply. That will take it as deemed income. On that calculate tax. That you assess now itself, the tax also, and pay, then you can leave. Okay. So non-resident shipping businesses, section 172. So how sir here, write down sir, in bracket, summary only will write, 7.5% of freight. %5 of freight from Indian port. 7.5% of freight from Indian ports is treated as deemed income. So this is not tax, deemed income. On this income again they will be calculating tax. 7.5% of freight from Indian ports is treated as deemed income. Then second one, sir, persons leaving India. For employment. Persons leaving India for employment outside India. Sir, here employment na, it doesn't mean literally employment, any work. Here employment means not just you working under someone, under the profession you can go, or as a business person you can go. Person leaving India for employment outside India. And then AO believes, AO na, sir, what does it mean by AO? AO means assessing officer. AO believes person has no intention to come back. Person has no intention to come back. So you are leaving India. Sir, how AO will know that that person is not having intention to come back and all? Will you tell? What he will tell if income tax officer asks also? No sir, I am going for a short visit only. 3 months I will again coming back to India only, he will say. Will he listen to all those stories and all? No. How could he determine that he is not coming back? Based on visa. For how much duration or what type of visa is given? Is it a work visa or a tourist visa? What kind of visa it is? How long the visa is there? So based on that he can conclude himself like whether he has an intention to come back or want to permanently stay there only. So based on that, okay, they'll decide. Once they decide that he is not going to come back, then the assessment will be carried in the same year itself. Otherwise, next year, assessment year, if they do assessment and send a notice also, he'll simply say like, I don't pay, do whatever you want. Sir, you watch Lucky Bhaskar movie, na? Climax where Bhaskar is there, Lucky Bhaskar is there in the outside India. Okay, now income tax people realized and sent a notice. What he'll do simply, he'll not even care for them. Okay, he'll simply say like, do whatever you want, you can do. I'll not pay anything. So if at all they know that before itself, that he is going to leave India, then what they can do, they can assess that time itself and they can ask him to pay tax then only, then he can leave. So okay, that's why. Person leaving India for employment outside India. Sir, understand, all these exceptions are with an intention that to avoid revenue leakages. Usually, if we are residents now, we cannot go anywhere. So usually we live in India. Even in next year, if the tax is computed also, no problem. We'll be there in India only. They can ask us to pay. But these people are non-residents majorly. Okay, these people go outside India and we cannot find or trace them. That's why they are asking to assess the income in the assessment previous year itself. Third one, sir. AOP, BOI, AJP formed for a purpose. Formed for a purpose or event and it is accomplished. I mean that purpose is done or the event is completed. Once the event is completed, they will dissolve. Sir, this is a simple thing like in your colony you are formed as a Ganesh association. So Vinayak Chaturthi is coming, so you people started as a AOP. And then you group only has collected some money among yourself, like each one like 10,000, 2,000 like that, and you kept a Ganesh idol there, you celebrated everything. At last, afterwards, there is a deficit of 10,000. Then if you ask the other balance money, nobody will be there because the purpose is served, nobody will be there to share that 10,000. Same here also. AOP formed for a purpose. After accomplishing the purpose, if you need to pay tax in the assessment year, nobody will be there to pay taxes. Okay, there are let's say 30 members. If you ask one person, he'll say other person name. That person will be say the other person name. Last they'll tell whose name, Ganesh name. Okay, so that's why where AOP, BOI, AJP is formed for a purpose and the purpose is accomplished and it is about to dissolve. In such cases also, the previous year income will be assessed in the previous year itself, because it would be so tough for them to recover the taxes in the assessment year. That's why. Then fourth one. Sir, if you want to write section number, sir, this 172 na, the second point is like section 174. Anyhow, you don't remember. I too don't remember. I don't even try to remember also. Unless if it is an important section number, I don't try to recover also. I mean, I don't try to remember also. Persons trying to dispose or pledge property. Persons trying to dispose or pledge property to avoid tax. To avoid tax. To avoid tax. So to avoid tax liability, you are selling that properties. You are selling that properties and you want to give that money to your family members or relatives, and then if income tax people comes now, you simply say like, you'll surrender to them. I don't have anything. If you want to do whatever you want, you can do. Okay, because minimum of like 1 year you'll be getting anyhow bail, even if he is arrested also. So that's why he is ready for that. So he is transferring the properties or he is pledging the property and saying like the property is under pledge, you cannot sell it, or even if he sells it also, the government cannot recover the full money. So that's way to avoid the tax liabilities is with an intention to transfer the property or to pledge the property. Government, I mean the department got such information then itself. So they need not to wait for the next year. What they can do? Now itself they can go and ask him to pay the taxes. I mean they'll assess the taxes and ask him to pay. So the last one, sir, fifth one. Discontinued business. Discontinued business, section 176. Discontinued business, section 176. So discontinued business, simple thing, sir. Company is dissolved. Company went into liquidation and all the assets are sold and the balance amount is given to the shareholders. Now the company didn't pay on the sale of assets and all, company didn't pay any tax, capital gain tax nor the income taxes and all. Now if you want to make someone is responsible, now that company has thousands of shareholders. And now all of them got their money and they were in different places and they are not ready to pay taxes. So when the business is going to discontinue, it is going to dissolve, in such case also they need not to wait till assessment year. The previous year income will be assessed in the previous year itself. So there are 5 instances where the previous year income will be assessed in the previous year itself. First one, non-resident shipping business. Why? The basic thing, he is a non-resident. We don't know whether he'll come back again or not. That's why. Second one, person who is leaving India for employment outside India. Here also same thing, he is going outside India, sir, and he has no present intention to come back. In future he might change his mind, but present he has no intention to come back. Then in such case also, we are not sure whether he'll pay the tax in the next year or not. That's why it will be assessed in the current year only. Third one, I mean previous year only. AOP, BOI or AGP formed for a purpose and the purpose has been attained or accomplished. Then in such cases also, the AOP will dissolve or the BOI will dissolve and the members will be scattered across the country. It's tough for the department to recover the taxes again. In that case also, previous year income will be assessed in the previous year itself. Fourth one, persons trying to dispose the property or pledge the property to avoid taxes. In such case also, previous year income will be assessed in the previous year itself. And the last one is discontinued businesses. Okay. Next one, sir. The next concept is undisclosed source of incomes. undisclosed source of incomes. Sir, we'll understand. I mean, sir, here there is Bhargav. The other guy is like Raju. Bhargav, sir, sincere student. Regularly he'll come to college, campus, and he cleared CMA. Then he got a job and he is working in a company. Raju, irregular. Okay, don't even focus on CMA also. Okay, later on he started his own business. No. He started his business and he is into mining, inspired by KGF, and he is also into some mining kind of activities and all. Whereas Bhargav is from childhood they are friends. Bhargav every day goes to school. Okay, every exam he used to get first rank. Okay, first rank Raju is there, na? Raju there, but here it is first rank Bhargav. Okay, but ultimately Raju is into business, Bhargav is doing a job. But they are best friends only. Okay. Then, sir, Raju started mining and all, but he was not bothered about paying taxes and all. He's not bothered about paying taxes and all. He's like mining like anything. Okay, whatever the hill he finds, he's taking JCB there, mining it and selling it. Okay, he's getting lot of money, sir. There are around like 4 or 5 crores he has. Okay, now Bhargav and Raju had a meeting one day, so and they were discussing like how life is going on and all. Raju said like, I'm working so hard. Bhargav is saying like he's working so hard and he's earning only 1 lakh per month. Whereas Raju said like, I had 4 crores I earned in this particular year only. Then Bhargav asked, okay, what you did that money? I didn't plan anything. Currently it's there in my account only 4 crores and all. Okay, inside and all it's burning. Okay, he went home, thought for the whole night, and early morning 7 o'clock he called income tax officer. Saying like, that fellow Raju is having 4 crores of money in his bank account. What you people are doing is not even paying income taxes also. So okay, 9 o'clock they came to his home. Asked his bank accounts and checked his bank accounts like, what is this money? Okay, he's not explaining the source. Because to explain that source, sir, those were not legal mining. Okay, he is mining whatever the hill he finds. Okay, he doesn't have any license or nothing. Okay, so he just bought a JCB. Okay, then if he finds a hill there, then he started mining. So he cannot explain the source, nor the, even if he provides an explanation, that explanation is not satisfactory to the assessing officer. He has 4 crores of deposits or cash credits. Cash credits, I mean account only it got transferred. So total 4 crores of cash credits into his account. He does not provide explanation, nor the explanation provided is not satisfactory to the assessing officer. Then he'll take all the 4 crores as undisclosed source of income and levy 60% as tax. Plus on that 25% surcharge plus 4% penalty. HEC. So total 78% gone out of that 4 crores. We are not talking about penalties, sir. In penalties chapter again there are 200% penalties also. Okay, only tax itself it will go how much? 78%. Then Bhargav got peaceful sleep and all. Okay, then also, okay, somehow this time Raju managed. Okay, since he is into JCP and all, he given out of 4 crores income tax people, you take 1 crore. Somehow he managed. Okay, and then he continued. Okay, then a year passed. Then in the second year, okay, Bhargav didn't know all this story. He was happy, like income tax people came, caught him, everything. So he is also in the same grounds. Then second year again they met. Okay, then again they asked. Okay, he asked, the business is super success. Okay. Not only hills, these days, I mean, I started even ponds and lakes also. There also I have started doing mining and all I got. This year I earned another 5 crores. But this time I'm thinking smartly. Last time I kept my money in bank account only. That's why those income tax people came and asked me. That's why I'm not keeping like that. I bought a land now. In the outskirts of Hyderabad only I purchased. Okay, 3 acres of land or 2 acres of land in Kokapet. Okay, he said everything. Okay, and he taken Bhargav also. See, this is the land only. Okay, in 3 years the price will double. Everything he said. Okay, blood also boiling this time. Again he called the income tax officer. When he went to home, again he called income tax officer. Last time if one person got unexplained money, this year also he'll be having now. So what you guys are doing? He said again. And he said even there he is having site. On particular day he got registration, everything he said. Okay, they came back and asked now, okay, congratulations, you purchased a land here for 5 crores. Now again they'll ask, for purchasing this land, have you got this 5 crores? What is the source? And what is he'll ask explanation. If he provides explanation, fine. But he cannot provide explanation. He cannot provide explanation, or the explanation is not satisfactory. So it's an investment. He purchased land, it's an investment which is unexplained. First one is cash credits. Second one is unexplained investment. Again, this will also be treated as what? Undisclosed source of income. Okay, again, 60% tax, 25% surcharge, 4% cess. Okay, this time Raju got deeply hurt. Okay, negative impact is going on and all. He called all those yogis from different states and all. He did lot of pujas and all. Then again he continued his business. Okay, then again he's digging wherever he finds. Okay, just like as in faction movies, sumos will go now, like that JCBs are going. Okay. Okay, then the third one, sir. Again, this time he thought like, I'm doing foolish things and all. He realized like, Raju, he thought like, first time I kept my money in bank account. That's why they can found out easily. Second time I bought a land, for that there is land registration and all. That's why this department people came to find out that. So now I'll take the money wholly in cash. Okay, and keep everything in my bedroom. I mean, under the bedroom, like underground, he has kept a place where locker, bunker kind of. There he is keeping the money under. Okay, but Bhargav is not getting any information this time. Okay, year passed. Now Bhargav only called. Raju, how are you? What are you doing? These days you are not meeting me also. Then one day, Bhargav is with Raju only. He is going wherever he goes, he is also following. Then at one time Raju said like, nowadays like I'm not putting the money in bank account, nor into the land or any other assets also. I'm keeping everything in cash and gold only. Okay. Then he is curiously asking, cash and gold na, like thieves will come, how you are storing all these things and all na? For that I had a brilliant idea. I had one bunker in my bedroom and all. Okay, then he said, fourth day again, went there, called again to the income tax officer. This time income tax officer directly came with hammer. Yeah, like in Mallana movie, he came with hammer. They found out the cash, gold, everything. Okay, again, this is called what? Again, they'll ask the same thing. What is the source of this income? Provide explanation. He cannot provide explanation, or the explanation is not satisfactory. Again, what? Undisclosed source of income. So this is what? Unexplained money, jewelry, billions. So these things. 3 points I said, sir. One is what? Cash credits. Second one is unexplained investments. Third one, unexplained money, jewelry, billions, all those things. 3 points. Fourth one, sir. So he was fed up with the income tax people, Raju. So he's thinking like, only if I have money, the problem is coming. I'll spend everything. If I get 5 crores, I'll spend 5 crores, that he thought. Okay, so Raju's son birthday is coming. Okay, so he's celebrating birthday grandly, his son's birthday. He thought anyhow, if I save somewhere, income tax people will come and they'll take away. So that's why he thought of spending whole 4 crores only and called Bhargav for that function. Okay, Bhargav went for the function and he observed everything. Okay, Raju giving for all the guests who are coming, he is giving gold coins as gift. He is giving gold coin for all the guests who are coming. He is giving a gold coin. Bhargav taken 3 gold coins. But still, that fire didn't stop. Okay, he called income tax people also to the function. Okay, income tax people also came to the function. Raji is in shock, but they wished his son and all, they went. Next day again they came back with all the records. Okay, what they did, they went to the catering guy and asked, how much you charge for catering? He said like 40 lakhs. Note it down. Okay, they went to these gold coins and all. They weighed everything. How many gold coins, everything. And they written all those things. So all the expenditure he has made now, that listed out. Okay, and next day they came to his house and asking like, you have spent 4 crores for your son's birthday. What is the source of this income? Okay, again, there is no explanation or the explanation is not satisfactory. So this is called as unexplained expenditure. That also will be treated as what? Undisclosed source of income, and again chargeable to tax at 60% plus 25% surcharge plus 4% cess. 4 points. And the fifth one, sir, this time Raju has hired a semi-qualified chartered accountant. Not qualified. Qualified na he'll give good idea only. Semi-qualified yet. Okay, CRCM. Then he said like, you are doing something wrong. This time you buy properties only, but some extent or some value you use legally earned money. Some amount you use the other source of money and all. So he has purchased a property which is actually worth 3 crores. But in books he has recorded it for only 50 lakhs. The 50 lakhs which he paid is legal money only. On the tax everything paid. But the other 2.5 crores is from an illegal source which he cannot explain the source and all. Okay. This is also known to Bhargav. Again same thing. They asked, okay, you purchased a property for 50 lakhs. Fine. But the property value is 3 crores. How have you got the other 2.5 crores and all? Again, there is no explanation, nor the explanation is not satisfactory. The balance, that amount also will be treated as what? Unexplained source of income. So here also, there are unexplained investments, but not to the full value, sir. A part with respect to investments, only a certain part is recorded in books of accounts, where the balance is not recorded in books of accounts. The last one, sir. This time, Raju earned money. He kept in the locker only, openly. Income tax people came. He only saying like, come sir, here only. See, this is the 5 lakhs I earned. When they are asking source, na, this time he is saying like, I got this 5 crores as loan from Vishnu. Vishnu, my friend, given this 5 crores as loan. Okay. They'll ask simply, how have you got this loan under? Okay. It's simply like, see, this is the promissory note we have. Okay. This is the promissory note. Previously, sir, there used to be something called hundi document also. Hundi na, not this temple's hundi and all. In ancient, like in Maharashtra, Bombay province and all, it's an earlier version of promissory note. Just like as promissory note, there used to be a document called hundi document. On the note only, they'll agree. Okay, so I have given you 10 lakhs as loan. Like that, they'll written there and they agree as it loan. So that promissory note or hundi document is there with the Raju, and he's saying like, I have taken this 5 crores from Vishnu. Okay, then they'll not believe him, because if it is 5 crores as loan, why you didn't take it from the bank transfer? Again, they'll call it as what? Undisclosed source of income. So all these are treated as what? Undisclosed source of incomes. Cash credits, unexplained investments, unexplained money, jewelry, bullions, unexplained expenditure, and investments declared in books of accounts at a lower value, investments declared in books of accounts at a lower value, and amount borrowed or repaid through promissory note or hundi documents. All these are called as undisclosed source of incomes. Okay. So we'll write down, sir, quickly. Explanations and all not needed, sir. If you have these things, the problem is what? Department will ask you source, nature and source of that income. If you explain that properly, no problem. If you cannot explain, nor the explanation is not satisfactory, then it is treated as undisclosed source of income. Cash credits. Second one, sir. Unexplained investments. Unexplained investments. Then unexplained money. Unexplained money, bullion, So bullion na the gold bars and all. Jewelry. Unexplained expenditure. Unexplained expenditure. Then amount of investments not fully disclosed in books of accounts. Amount of investments not fully disclosed in books of accounts. Unexplained investments, unexplained money, bullion, jewelry, unexplained expenditure. Amount of investment not fully disclosed in books of accounts. Amount borrowed or repaid on hundi. Amount borrowed or repaid on hundi. For all this, the problem is what, sir? SSC offers no explanation, nor the explanation is not satisfactory. SSC offers no explanation, or the explanation is not satisfactory. Or the explanation is not satisfactory. SSC offers no explanation or the explanation is not satisfactory. Sir, on all this, what is the tax rate, sir? Tax rate 60%. Surcharge flats are here. How much? 25%. Plus 4%. So effectively it comes to how much, sir? 78%. Effectively it comes to 78%. So then here, when compared to old versus new regime, we understood like new regime, the tax rates are comparatively better because the slabs are higher, slabs are there. Basic exemption limit is also higher compared to the old regime. So in any way, which is beneficial, sir? New regime is only beneficial. But the problem is certain exemptions, certain deductions are not allowed under the new regime. Okay. So write down, sir, certain exemptions and deductions are not allowed. Certain exemptions and deductions are not allowed when a person chooses default brackets new regime. Sir, majorly for tax computation and all, we have how many heads? 5 heads. Salaries, house property, PGBP, capital gains, IFOS. Then there we are having a chapter called deductions. Okay, you need not to refer to exemptions chapter. Why? Because the income which is exempted, first of all, it might have covered under any of these 5 heads. Then it would be exempted. Let's say there is an exemption related to salary. First of all, the income is under which head? Salary. Then again, exemption. Business related exemption. The income will be under PGBP head. Then there will be exemption. So incomes are there under the 5 heads and related exemptions. And then there are deductions. So total 6 chapters will have an impact regarding this old regime versus new regime. Salaries, house property, PGBP, capital gains, IFOS, then deductions chapter. Okay. So now, if you look at these 6 chapters, the problem is like, we are going to discuss separately PGBP chapter here. So whatever are the changes that impact versus old versus new related to PGBP, we'll discuss in the PGBP chapter only. And the next immediate chapter we are starting is deductions only. So with respect to deductions chapter also, in that chapter only we'll understand. But coming to salaries chapter, we'll not discuss at final level. House property will not discuss at final level. But we should know at least what exemptions or deductions are allowed in old regime but not allowed in the new regime. So first we are starting with salaries chapter, sir. Quickly we'll write down salaries alone. Income from salaries. Income from salaries. Taking columns are like old regime, new regime. So for you to just to recall you the salaries chapter, sir, the salaries chapter, there will be basic salary, dearness allowance, bonus and commission that we will take. Then there will be lot many allowances in the salaries chapter like HRA allowance, children school fee allowance, hostel allowance, leave travel allowance, okay, and then conveyance allowance, travel allowance, transport allowance. So like that there are so many allowances will be there. The second part is about perquisites. There will be so many perquisites there. Rent-free accommodation, motor car perquisite, servant facility, telephone facility. So those perquisites will be there. And the third segment there is like retirement related. Leave encashment, gratuity, provident fund, PF fund, pension, commuted pension, uncommuted pension. So those retirement related. And at last we'll find out gross salary. From there gross salary there will be 3 deductions. Standard deduction, professional tax, entertainment allowance. Okay. So that is the basic salary chapter, right? So now if you remember, sir, HRA there will be exemption there. For all the retirement related gratuity there will be exemption, pension related exemptions. Okay. So now we'll be listing out quickly whether those exemptions are available in the new regime or not. Okay. If in this list we didn't mention na, okay, some items which we mention here also will not have any change or any impact. But if anything we don't cover also, simply understand like it doesn't have any impact whether it is old regime or new regime. Okay. First one, sir, we'll start with HRA. Some major allowances we will cover, sir. Allowances majorly. HRA. Sir, HRA related there is exemption in the old regime. So old regime it is exempted. New regime it is not applicable. So HRA exemption is not available in the new regime. Then leave travel concession. Leave travel concession. If you remember, sir, in a block of 4 years, twice the leave travel related concession can be availed to the extent of the freight charges incurred. So like if it is to the air route, economy class ticket related freight for employee, his spouse and maximum 2 children, those things are allowed, right? So leave travel concession is exempted in the old regime. whereas in new regime it is not available. Third one, sir, children education allowance. 100 per child will be exempted under the old regime. Maximum 2 children. But whereas such exemption is not available in the new regime. Hostel fee allowance. Again, 300 per month will be exempted in the old regime. But whereas in the new regime, if you opt, that is also not available. Then fifth one, sir, travel allowance to the disabled. 3,200 will be given as exemption to the disabled. If he is blind, deaf, dumb, or handicapped, for all those there will be a travel allowance which is exempted up to 3,200 per month. That is exempted even under the new regime also. So this is important. So the travel allowance is exempted even under what? New regime. All the others and all here taxable only. But with respect to a disabled person, travel allowance 3,200 per month is exempted. Let's say the company is paying 5,000. How much is exempted? 3,200. The balance 1,800 is taxable. Such exemption can be availed even in the new regime as well. Then, sixth one, sir, I am combining 3 points here. Travel allowance on transfer. Daily allowance. Travel allowance on transfer, daily allowance, uniform allowance. Travel allowance on transfer, daily allowance. These are exempted in the old regime, sir, to the extent of actual expenditure. See, for transferring your residence on account of transfer of your job, or with respect to daily allowance, daily to go to your office, or with respect to that if any travel expenditure is incurring, for that if any daily allowance is given, or uniform allowance is given, they are exempted to the extent of actual expenditure. Extent of actual expenditure. The same is even exempted under the new regime as well. This is exempted even in the new regime as well. Then retirement related, sir. Retirement related, now what are those? Gratuity, pension, leave encashment, VRS, all those are VRS, retrenchment, PF. All these are exempted in both the regimes. All these are exempted in both the regimes. Then perquisites, sir. Sir, perquisitely, majorly, they are taxable only, sir. There is only one exempted perquisite. What is that perquisite? Na? Food coupons up to rupees 50. If the meal is provided up to rupees 50, it is not treated as a perquisite. Above 50 rupees and all, it will be treated as a taxable perquisite only. That exemption is there even in the new regime also. So perquisites related also, all perquisites, all perquisites related, the treatment is same under both the regimes. Treatment same under both the regimes. Treatment same under both the regimes. So we have covered allowances, we have covered retirement related, we have covered perquisites. Then there are deductions under section 16. First one is like standard deduction, sir. Under old regime, it is very important, sir. This has been asked so many times. Standard deduction 50,000 are under old regime. Whereas under the new regime, it was updated. It is how much? 75,000 is allowed. Under new regime, there is more standard deduction. Sir, under old regime compared to new regime, two places the government is clearly promoting the new regime, sir. Okay, they are promoting only new regime. So they don't want you to take all those deductions and all. But they thought like two things are very much keen and important. Everybody are focusing. One is salaried people. They are much focused on standard deduction. So to get their favorable thing from them, standard deduction they hiked in new regime 50,000 to 75,000. And then rebate also, many people are curious about rebate. That's why old regime they remained it as like how much? The same 12,500 only. But in new regime they made it 25,000 and the limit is also up to 7 lakhs. Okay. Entertainment allowance to government employees. Entertainment allowance and to government employees. Here it is available. Here it is not available. Then professional tax. Sir, available government allowance. How much is maximum, sir? 5,000. But that is not available. Professional tax. That is available as deduction under the old regime, but under the new regime, it is not available. How much available also? Up to rupees 2,500. Okay. So next class, sir, we'll be starting with deductions chapter. But here there'll be some 5 minutes discussion like house property related, what can be availed or not. IFRS, there will be only one point related. Capital gains later, there won't be any changes. New regime or old regime. PGBP anyhow will discuss separately chapter. There we'll discuss elaborately. So next class, some 5 minutes discussion will be there in this particular topic. Then we'll be starting with the deductions chapter. Okay. Sir, all these chapters like basics, we cannot find out the separate weightage for basics chapter or even for deductions chapter. But in every question, almost like out of 13 questions being asked in exam, descriptive questions, around some 5-6 questions will have impact of this tax rate, tax calculations and deductions. So that's why these are the base for us. So once we complete deductions, then we'll go straight away into the PGBP chapter.